All right, traders, it is Monday, so let's take a quick look at the week that was as well as the week ahead. And we're going to start off with the analysis we did last week on BAC. Okay, Bank of America rolled right down into our projected price zone, and in doing so, produced the long entry. Okay, so what I'm going to do is we'll come back in here, take a look. As you look left right here, we discussed the swing highs at 24.60s to the new structure low. From there, we did an outside return lower high right here. I took the 1-to-1 symmetrical measurement and identified a point of probable structure support. Number two, we took two different legs and we found a 1414 price extension that came in right at 350 versus 411. So about a 60-cent window there right at the 1-to-1 measured move. So we talked about the buy at $3.50 to $4, and then as it moved down right here, we talked about buying the options. Some of you looked at the 750 calls. So this moved down into a new low, outside return lower high. We did our analysis right here, and it moved right down to a low at 377. So there was your long entry. And then from 377, the close on Friday, 613. Okay, so nice pop right there on BAC. We had a Thursday higher high, higher close. Kind of a rejection candle here as they tried to move it lower. We then gapped higher from the close, opened it at 539, and then closed it just 30 cents off the highs. Okay, so BAC right there, opportunity to cover partial. We'll see where it opens today. And again, remember, initial targets right here at 750 area. If it takes out that swing high, then we're going to look for the inversion of the last leg of the move. So I'm going to go swing to swing right here. Okay, and you'll see that the 1618 price extension right here is right at a major recent high to high trend line extension. Now again, price action probably, if we take out that swing right there, will accelerate like this, and then that secondary target would come in at around $9.50 to $10. Okay, so again, pretty significant point of confluence. I'm going to leave that out there. Now, prior to that, we talked about XLF, and we talked about buying those calls. We had the same type of setup. We had 1-to-1 symmetry. We had back-to-back 1618 price extensions. Initially, DST traders, we told you about the buy signal at the 850 zone. When we got this big gap open that day in the room on the 28th of January, we talked about covering half. And then as we pulled back here to our 2618 buy, we talked about adding the scalpers, that half that you took off for profit, adding those back in right here. So those would be a back long from $9. And again, Friday you see the close $9.79. Those would be a cover again right around the 1040 area, 1025 area. And then again, looking for a target back into $11.50 to $12. Still obviously a significant bear pattern. Same look as the BAC. Let's go take a look now at RIM. Okay, RIM's taken out that previous swing resistance level right here. And now as it moves higher, could get the pullback into a point of confluence for the long entry. Continue to track that. We'll take a look also. T still just hanging out sideways. The buy signal right there at 104. Lowest low since entry, 101.60. And you see it's just hanging out right here around the 101, 102 area. So about $2 against the position. But again, beautiful ratio trade buy. Just past 1-to-1 symmetry. Ratian confluence present. Yen, long entry right there hit at 58.50s. And from that long entry, targets into 68.50s. Again, risk below the 54, so a 53.50 stop for about $5 of exposure versus $10 upside potential. Okay, so Devon Energy still hanging out near the entry. A lot of you asked about GLD, and again, GLD, beautiful 3 drives to a top. From the original sell right here, pulled back and attained the first target. Now here's the add back in right there. The 3rd drive to the top, Ratian confluence and previous triple top resistance highs from late fourth quarter '08. So just a quick recap overview of the stuff that we looked at last week. Now let's look at the week ahead. QQQQs, a retest of that $32 area. Okay, so very easy to see structure resistance. We're approaching that last swing high at $31. That was the last swing prior to this $3.50 move lower. Take the last leg of the move right here. From the swing low, we drove to this impulse high. And you can see right there, we've got a 127 extension. Okay, so intraday, watch your hourly chart for an SOS3 sell. SPY. Let's go out and take a look at the 240-minute price. And you can see that the 240 moved right into an extension. Previous structure resistance. As you look left, same type of setup as what we saw in GLD. Okay, so low risk short entries right there. We had a initial test for the sell. Some of you took profits on this pullback. Now again, we could get a symmetrical double top right against that area. So those of you that took that $1.50 to $2 right here, opportunity to add back in if we get that rebound into this price point. And it looks like we're trading around 86 to 86.50 this morning. Okay, back into structure resistance at 84. And from our long entries down here, you've already attained your first target. So diamond right now, really not much going on. And then finally, let's look at FLR. Go back into the daily. We talked about that buy on FLR, and it's rallying nicely. We caught it and did the analysis when it was trading down here around 37.50s. And from that long entry, 3 consecutive higher highs, 3 consecutive higher closes actually. And you see here that we closed near the highs at 41.50. Now again, initial targets into 44.95, so only about $4 left right here. Stocks trading around 250 a day, so back-to-back 100% days will get us right into that target. A week ahead type look, an update on what's gone on, and then let's just sneak in a Forex right here as well. Okay, here's the CE trade right there. So there's the CE model. We had contraction, got the expansion, and you can see it moved right into the profit target. Now, we discussed this last week as we were looking at non-farm payroll. Saw a little bit of volatility off the news and then finally got a clean follow-through. The highest high right there, 29.93. Okay, and as you look over here, that 29.93 was just 20 pips shy of the target for about 100 pips. Aggressively would have been taken out for probably around 75 pips profit. And if not, you just let it run, stop versus target. Your 50 pip stop easily held, and right there was your profit target. So real nice trade there on the CE model. Prior to, we had the news event right here to create some volatility, got the follow through as expected, and now we'll see if we get another setup. Again, note, significant structure resistance at the 130.50 level. We're blowing right into that right there. So today in the room, we'll cover some possible aggressive shorts. Forward to a good solid week ahead. Trade what you see, not what you think. Follow the rules of engagement of your trading plan, and we'll see you in the live room.
If you feel the preceding video was a valuable tool to you, we'd like to encourage you to go deeper by visiting our website at thetradingauthority.com. Click on the free live room trial button to receive over 2 hours of exclusive trading psychology videos and 1 entire week of live coaching and mentoring with master trader Todd Brown as he demonstrates his exclusive dynamic structured trading system live. Simply fill in your name and email address and wait for the logon instructions to arrive. Don't wait to take control of your trading education. Take advantage of this free offer now.